I want to tell you about the greatest business model in the history of human civilization. It's not Amazon, it's not Apple, it's not the oil industry, it's your bank. And the most beautiful, or depending on your perspective, the most diabolical part of it, you funded it. You're literally financing the thing that's charging you to exist. Here's how this works, and I promise you, this is not a conspiracy theory. This is an economics textbook. It's just that nobody ever handed you the book. Let's say you deposit $1,000 in your bank account. You feel good, responsible, you're adulting. You got a little notification on your phone, deposit confirmed, and you go about your day thinking your $1,000 is just sitting there, waiting, loyal, like a golden retriever. It is not sitting there. The second you walked out of that bank or closed that app, your $1,000 got to work. For them, not for you, for them. This is called fractional reserve banking, and it means the bank is legally required to hold only a fraction of your deposit, historically around 10%, though the Fed actually dropped the requirement to 0 in 2020. Yep, and the rest, they loan it out at 7%, at 12%, at 29% on a credit card. Your money, their interest rate, their profit. So let me do this math out loud, slowly, so we can all get this together. You deposit $1,000. They keep 100 and they loan out 9 at 29% on a credit card. They earn roughly $261 in interest. They pay you, at a typical savings account rate, about $450. So on your money, they made $261. And banks make more than 2,900% on other people's money. It's usually much, much more than that. Just think about it. You made a measly $4.50. That's not a savings account. That's a charitable donation with extra steps. Now, where does 2,900% come from? Because I know that number stopped you, and it should have. Here's the thing about banks that most people don't fully grasp. They don't just loan your money once. They loan it, it gets deposited somewhere else, and then that bank loans it again, and again, and again, and again. This is called the money multiplier effect. And through this mechanism, a single dollar deposited in the banking system can be multiplied, lent out repeatedly by a factor of 10 or more. When you look at the total return the banking system generates from a single deposited dollar across all those lending cycles, compared to what the original depositor earned, the spread is enormous, thousands of percents. The exact number varies by environment, by rate, by reserve ratio, but the point is the same. The architecture of this system is designed to generate extraordinary returns from other people's money. Your money. That's the oldest wealth-building principle in the game, and they've been playing it with yours since the day you opened your first account. And guess what? I'm not mad about it. I'm genuinely not, because the bank's not breaking any rules. They invented the rules. What I am saying is, now that you know the rules, what if you played by them? Banks, specifically the large ones, hold what are called Tier 1 capital reserves, the money they are required to have on hand to remain solvent. You know what a significant portion of that capital is held in? Life insurance, specifically cash value life insurance. They call it BOLI, bank-owned life insurance. JP Morgan holds billions in it, Wells Fargo, Bank of America. The very institutions that are charging you $35 overdraft fees are simultaneously holding billions of dollars in cash value life insurance policies because they understand something most of their customers don't. Cash value life insurance, specifically an indexed universal life policy, what we refer to as private banking contracts, when properly structured, do what your savings account pretends to do. They hold your capital. They grow it, linked to market indexes, protected by a floor so they can't go backwards. And you can borrow against them tax-free, with no credit check, and completely on your schedule, so your capital keeps compounding while you put it to work somewhere else. Armed with the same tools used by the wealthy for decades, you and your family can build, grow, and protect multi-generational wealth and change your cultural banking legacy forever. You become the bank, not metaphorically, architecturally. You are now the entity that holds the reserve, earns the return, and controls access to capital. You are no longer the depositor funding someone else's 2,900% ROI. You are the institution. Now, I'm an educator, not a licensed agent. I don't write policies. What I do is utilize my 35 years of financial and capital markets tenure, decades-long wealth-building practicum, and 30 years of pedagogical training to make sure you understand what's possible before you decide what to do about it. If you want to understand how the private banking model actually works, how to construct it for free, what it costs, what it does and doesn't do, visit us at fourthwish.com. The education is free, the insight is priceless, and at least now you know what the bank knew all along. Once you're satisfied with the information and are prepared to build your private banking system, our team of licensed private banking architects will help you change the way you bank. I look forward to our conversations. Talk soon.